If you don't understand time frames, you're going to get lost in the market. In this video, you'll learn how time frames work in forex, how to read candlesticks on different time frames, and how to use them like a pro. A time frame shows how long each candlestick represents. For example, 1 minute means each candle is 1 minute. 5 minute means each candle is 5 minutes. 1 hour means each candle is 1 hour, and 1 day means each candle is 1 day. The higher the time frame, the bigger the move each candle represents. No matter the time frame, every candle still has an open, a close, a high, and a low. A bullish candle closes above the open. A bearish candle closes below the open. Wicks show rejection, and this applies on all time frames. Let's say you see a bullish candle on the 1 hour chart. If you switch to the 5-minute chart, you'll see that same candle broken down into many smaller candles. This helps you understand what really happened inside that move. Different time frames tell different stories. Higher time frames show the overall trend, while lower time frames show entry opportunities. That's why traders use multiple time frames to make better decisions. Always start from a higher time frame to understand direction, then drop to a lower time frame to find your entry. Don't trade blindly on one time frame. Now you understand how time frames work and how to read candles across them. In the next video, I'll break down market structure and show you how to read charts like a pro. Make sure you follow and subscribe.